Bismillahirrahmanirrahim. Assalamualaikum and very good evening, dear student. So this is a recording for chapter 11, transport business. Alright. So when you want to start your business, you have to understand your market structure. Means where you want to establish your business. Let's say you want to establish your business in Kuala Lumpur, so you have to understand what kind of market structure in Kuala Lumpur. So another example of market structure, it can be like no barrier to entry. No barrier to entry means anybody can establish a logistic company, so that when there is no barrier to entry the market, it will increase the competition between the companies. And then there are also kind of market areas you have to identify, such as monopoly situation. So at monopoly situation market area, where it's only you, so you can put any price to your customer. Okay. If regulated situation, so you have to know what is the regulation decided by the government for the logistic company. Next, after you understand the market situation at the area where you want to start your business, you have to consider the most important things in doing business is on the cost. Alright, so we have control cost, non-control cost, direct, indirect cost, fixed and variable cost, actual and also opportunity cost. So every mode of transportation has a different amount of cost. So here when we discuss type of cost, we will refer to land transport as example. We look, the first one is fixed cost. Fixed cost is kind of cost that you have to pay every month or every year. You know it already. It's not based on your job or your business operation. Example, the rent for your business premise, the loan for your truck, so you have to pay. Or if you have your labor, driver, clerk, receptionist, so you know what is their salary that you have to pay monthly. However, sometimes the fixed cost can be variable cost. Example, if you have extra job on next month, you have extra trip, so you need extra driver, so you need to hire part-time driver for next month only. So the labor cost for next month for the part-timer driver will be the variable cost. Another variable cost is fuel. Example, if you want to move from Perlis to Kuantan, of course the fuel price will be different if you want to move from Perlis to Johor Bahru. So it is a variable cost based on job that you get on that month. Next, we have controlling cost. Controlling cost is cost that you can control based on your business strategy. Example, distance operated measures by vehicles or the driver. Okay, let's say you want to go from Alustar to Sungai Petani. You can control the distance. Either you want to go through the highway or you want to go through the state road. So you decide. So you control the distance. Alright. We go to the next part. Service pricing. Means how much you want to charge your customer and how much profit you want. So let's example, your customer want to deliver stuff from Perlis to Johor Bahru, so they will ask you how much price you will charge them. Sometimes can be based on trip, sometimes can be based on freight, amount of freight. Alright, so this is the first way how we decide the price. First, you have to know your fixed cost, how much you pay every month. Next, you have to know the variable cost based on the job. And then you decide how much profit you want to get from the job. Alright? So, value of service pricing. There is the third degree price discrimination. Means that for the same job, for the same cost, but different customer, you will charge different price. However, the price will be within the price floor, means the lower price, and also the price ceiling, the higher price. Okay, please look at the slide 13. The upper line is the ceiling price and the lowest line is the floor price. So the price that you can charge the customer is within the line. However, in logistic company, until now, there is no such ceiling price. So you can charge any price that you want. However, in some product, such as fuel, such as chicken, the government put some ceiling price, how much the seller can sell to the end customer. Alright, we go to the general land transport rate system. How you want to rate your customer? It can be based on some of the factors. I give example on the product density. Usually, if you want to transfer a freight that heavy, so you will charge more. We look on management of pricing in transportation. Factor affecting land transport pricing decision. First is the role of the market, there is the customer and also the competition. Usually, when the competition is high in the industry, the company tend to give lower price to get customer. However, there is some other pricing strategy which you can read more in the textbook that I told you in class and also through the WhatsApp group. So this is pricing strategy where you as a company want to get a good profit without burden the customer or without reveal that there is other better competitors than your company. I give you the example of number 3, unit volume pricing. Okay, you can give extra bonus or extra discount if the customer willing to use your service, willing to transfer their freight in high volume, use your service. Means that the higher volume of freight they use your service, they will pay less, usually like that. And there is also other consideration when you want to put pricing rate for the customer. Example, the demand base. Usually, when demand increase, the price will be increased. And it can also be based on cost base. Usually, if the cost rise up, you have to increase the price. Example, let's say the fuel price of diesel increase. So you have to increase the price charged to the customer, because when the diesel price increase, it will increase your variable cost. For further reading, you can go on chapter 6 in your land transport textbooks to read more about the pricing strategy. If you have any question, you can come back to me via call or WhatsApp personal. Thank you very much for your attention. Assalamualaikum.